Welcome to FOMO Consulting for your daily AMC stock analysis video on Thursday, April 29th. Ladies and gentlemen, we have a heavyweight battle. A battle between the hedge funds, institutional banks versus the diamond hands, the apes, and the retail investor. And I have no doubt that we are winning. So if you find this video informative and entertaining, please like, share, and subscribe. It is a newer channel and I'd appreciate the support. Let's get into the video. First and foremost, I would like to thank each and every one of you who have commented, liked, shared, and subscribed. It means the world to me, and thank you. So let's start with a quote. Football is a game of inches, and inches make the champion, by the coach himself, Vince Lombardi. We are in a game of inches. This is a grudge match. This is a battle of wills. This is a battle of longevity. This is a battle of ideals. We are in a battle against the institutional banks, the hedge funds, versus the retail investor, the apes, and the diamond hands. But I do believe we are winning the battle. We are winning the game. So let's look at the broader market. So all three major indices up today. However, there were some blue chip stocks that were down. Tesla, Apple, Microsoft, certainly Apple after the big run up from last night. Not surprisingly, a huge earnings report last night. AMC, I believe, did feel the effect of some of these large blue chip stocks being pulled down via ETF and other means. But overall, not a bad day on the broader market. So, ladies and gentlemen, this may be the biggest news we've had yet. Kind of been waiting for this. The earnings report will be released 5 p.m. Eastern Daylight Time shortly after market close on Thursday, May 6th. If last time is any indication, we will see a very bullish run-up in the days leading up to that, especially the day of. If earnings estimates appear to be very positive, I do believe this could be the catalyst we've been waiting for that could break us out of this, 10 to 10, 11, $12 range. That's exactly what happened last time prior to the previous earnings. So this, I believe, will be absolutely huge for us if, in fact, earnings estimates do come out and appear to be bullish. So I touched on this yesterday. The algorithmic trading is prevalent in the market today all throughout. 70 to 80% of the market is basically algo trading. And I'll touch on why that's important here very shortly. So you've got the apes, right? We are holding up the floor. Today we held the $10 floor quite well. We had a 2 bounces off of that $10 support. I do believe that is a very firm support at this point, but make no mistake about it, that $10 line, I believe, is very, very important, especially going into next week. So I touched on this briefly yesterday. The apes, diamond hands, retail investor owns 79.2% of the stock. We are holding, we are buying, we're not moving, no one's selling, which leaves around 20% of the stock able to be moved around between mutual funds and institutions, what have you, not including obviously the shares on loan and all the synthetics and that sort of thing. This is very, very important just to keep a mental focus on that we own nearly 80% of the stock and 80% of the company. So I want to look briefly to today's daily chart and then compare it to the 3 major indices. And you can certainly see how AMC moved throughout the day, and it somewhat mirrored the broader market, right? Obviously, every stock is unique in how it moves on a given day, but overall, the trend does somewhat follow the trend of the broader market today. So that is why I am certainly not concerned about the stock. We did close down, obviously, at $10.20, down 65 cents. 5.99%. We are slightly down after hours at the time of this recording, but I am certainly not worried about this stock at this point in time. If you look at the broader market, you can certainly see some similarities in the movement of AMC today. So I'll try to keep things in perspective. So what I want you to look at the two green arrows. If you look at the green arrow, that kind of goes back to late February, early March. As we made our bullish ascension, we had some red days, right? Red candles. This is a daily chart. We certainly had a run up, then 4 green candles before we continued our upward ascension. We are somewhat in that pattern again this week. We had the big push on Monday. We have now had 3 red days in a row, albeit not terrible. We are still up for the week. I do anticipate, probably a flat day tomorrow is my personal feeling. I think that the 10 to 1050 area is going to be the battle line. I believe that is where the fight will be, and I'll show you that very shortly. So certainly not technical analysis. A lot of things I do are just for illustrative purposes. But if you look at the channel today where the green arrow is, that is the range of trading this week, highs and lows. It's pretty much mirrors where we've been overall for the last, couple of months since early March. We've spent an awful lot of time between that $10 and $12 range. Obviously, we got pushed down, over the last few weeks into the 9s, if not into the 8s. But we are back into that $10 to $12 channel. And I do believe once we break out of that on the bullish side, we will initiate a squeeze or be very, very close to it. So again, just want to show an illustrative trend line. These are the last 3 trading days. I just copied and pasted the red line just to show the overall trend. Obviously, we typically have started up in pre-market, a little bit bullish. We have a little pump and open, then we obviously drop down, and then we pretty well grind down throughout the day. Then we have some slight recovery in power hour. There's always that pop right somewhere around 3:30. We seem to climb back, which is a great sign and shows great strength. But again, this is more illustrative of the trend of the last 3 days, just so you can get a broader perspective. So once again, we are moving average is in a very bullish direction. We are officially in a MACD bullish crossover. That is very positive. I do believe or anticipate we'll be in that pattern for the next couple of weeks or so at minimum. If all goes well, we are certainly trading in, again, then that $10 to $11 channel that we've been in for quite a bit over the last couple of months. I do believe if we break below 10, we will probably be in that mid-9s again, right? If we can get above 11, I do believe there's not a lot of resistance much past 11, and I do believe that we will continue to, head upwards. Again, this is not financial advice. This is merely in my opinion, and I'm just showing you illustrations based on the trends. So when in doubt, zoom out, right? So we are clearly still in an upward trend going back to early January when we were at $2. We are currently obviously in the 10s, but the larger scale is still very promising. We are heading in the right direction, and the last 2 times that we've had a bullish MACD crossover, we have pumped substantially, and we are now beginning that trend once again. So let's look at the short interest from today and some of the key data. Overall, let's look at the institutional owners. There were 10 additional institutional buyers from yesterday. We are at 397. That has gone up substantially in the last month. We were in the 350s around 30 days ago. We are still, again, 100% owned. 79.2% is retail, diamond hands, apes, and retail investors. Today's volume low again at 37 million, certainly lower than earlier this week. Short shares available. Your guess is as good as mine. 400,000 with Fintel. Short borrow fee at 16.3%. Fintel data. So let's look at the Ortex data above. Estimated short interest of free float 23.26. Actually down just a touch. Free float on loan, we are at 35.92%. Down just a bit. Shares on loan, down just a bit at 150 million. We're down about 3 million, almost 4 million from yesterday. Days to cover, however, has gone up substantially versus yesterday. We crossed 1. We are now at 1.16. I do believe we are in the 3 to 4 day range based on how you calculate it. Cost to borrow continues to go up. We are at 13.43, so the risk is getting higher. And we are still, for the last week, at 100% utilization, which is absolutely huge. So this is an interesting chart to look at. A couple key things I want you to look at. The trend lines signify the 2 weeks days to cover, cost to borrow, shares on loan, and estimated short interest. So all the key data we look at, right? If you look at the yellow line on the left, that is about the time we crossed the $14 mark in and around that area. You can see where the shorts got out of their position. They covered, which again increased the price to the $14 range. I believe we are approaching that. If we can get around 12, 13, I believe we can force them out of their positions and potentially cause the squeeze. Second thing is, if you look at the difference between where we are today and where we were 3 months ago or 2 months ago, we are double the amount of shares on loan and short interest as we were then. You also see, if you look closely on the right-hand side where we are currently, there is beginning to be a downtrend in both on all those indicators. It can be a very short-term correction. I'll be watching this very closely, but as we have risen in price, there may be some covering ongoing. If we can get above, $11.50, $12 and stay there, I believe we'll put enough pressure on them to begin to cover. Just my opinion. So I've shown this before. Again, we are 3 times the amount of shares on loan and short interest as we were before the baby squeeze in late January. I believe this is very significant. And again, that $14 mark, in my opinion, is very, very significant. So let's look at the overall sentiment. Again, I don't play options, but I do use them for looking at the sentiment, bullish, bearish. We are still overwhelmingly bullish. We are at 2 to 1. Without a doubt, I believe, again, all the ingredients, all the key data is lining up for a squeeze. So let's look at the largest sales on the options today. There were nearly 1,000 expiring May 14th, $11 strike calls. There were 3 very large purchases made in that area. Same strike, same expiration. I believe that, again, that's very, very bullish. So let's look at, this is from my Webull account, let's look at the open interest expiring tomorrow. And again, I believe this is where you can see where the battles are won and lost, quite frankly, on a given week. There is a ton of open interest on the puts, but the yellow arrows signify open interest in and around $10 to $11.50. There is 37,000 in open interest on the put side between 10 and 11.50. Let's look at the calls. There is 44,000 open calls expiring tomorrow between 10 and 11.50. Again, I believe somewhere in that range is going to be the fight. They've certainly tried to press us down, obviously close to 10. If they can get us under 10, I'm sure that the shorts would love that. But I do believe the fight will probably be around that 1050 range. If we can close above 1050, it'll be huge. If we can get above 11, we put another 18,000 contracts in play in the money, right? So I want to briefly discuss about the different kinds of squeezes. Obviously, you've got the AMC, the baby squeeze, right? You have the Tesla. It's a very long squeeze. Started over a year ago, went from in the 40s up to $900. Took a year to play out, but very, very profitable if you were in that. And then obviously GME, right? Same time as AMC. I only bring this up because no one knows when this will happen. Furthermore, no one knows what it will look like. This could be a Tesla type squeeze. This could take quite some time. It could also be the violent, to the moon squeeze like GME and AMC earlier this year. We just don't know. But I do believe as you plan around what your future looks like, your exit strategy, how you want to play this, I believe, quite frankly, you need to be prepared for both. This is not financial advice, it's just my opinion, but I know myself, I am preparing for both scenarios. So as always, I am skinning the game, diamond hands just like you. I am down $3 grand today. I am red, but it's okay. I am more confident and bullish than ever that we are holding a fantastic stock. We are supporting a fantastic company, and that the squeeze will happen sooner rather than later. So one last quote. The number one job of a hedge fund manager is not to make sure you can retire with a smile on your face, is for him to retire with a smile on his. Mark Cuban, owner of the Dallas Mavericks, Shark Tank, you name it. I believe that's very, very relevant. I believe that sums up exactly why so many people are so upset, why so many people join the movement. They are in this for that very sentiment. So again, I believe this is relevant today. So I want to thank you all for watching, and if you found the video informative and entertaining, I would ask that you please like, share, and subscribe. Again, it's a newer channel. I would appreciate the support, but as always, I hope your lives are full of green candles. I'll talk to you soon. Take care.